Hello everyone and welcome back. My name is Greg Furman and this is the Forex Weekly Outlook for the week of November the 19th, 2018. Now, to get started this week, we're going to begin where we always do with that all-important US dollar index. Now, the dollar coming under pressure, which was suggested in last week's Forex Weekly Outlook, that the dollar's upside is likely to be very limited. Now, the Fed kind of reversing course in some of the things that they're saying, and that's helping put additional pressure on the dollar. We can see right now that we've lost our critical support, 96.47. We're breaking down below that, albeit on a Friday, so we're likely to see some retracement on Monday. But our additional indicators, our predicted MACD, our predicted RSI breaking down below that 40 level, and our predicted MACD, all of which are pointing lower. Now, when we look at our long-term pivot area here, where we like to use this on a week-to-week basis, we can see we've had a nice clean break of the long predicted at 96.73, suggesting that we are likely to move down towards this lower end of the current range, which would be approximately the 95.48 area. Now, with this particular move, you can see that that's having a positive effect on gold. Gold turning higher as the dollar moves lower. Now, we've managed to take over a key hurdle, that T-cross long 1219.75. Again, our neural index has been pointing up for several days. RSI 61.8 starting to show some real strength here. But again, we like to see the predicted differences back up above the zero line to really get this thing moving. Now, when we look at our long predicted here, our critical level on a day-to-day basis, once again, we've made a nice clean break of that blue line here, the long predicted. So 1216.47 with the close of 1226. Our key pivot area will be 1216 for Monday. Now, with light sweet crude oil, this one here, I'd love to say that we've reached a bottom on oil here, but I'm not really convinced of that just yet. We've hit all the way into a low here of 54.90 before we're starting to take a very, very slow bounce here. Our neural index is finally turning positive. But the neural index does not mean that we've got a trend reversal here, guys. It just means that we could have an up day. Now, when we look at it through the eyes of using our blue line, our predicted line only, we have not been able to make a clean break of this critical long predicted 58.32 is the current level, but we haven't been able to make a clean break above this area, basically going back all the way into the beginning of October. So oil still carrying a very bearish tone to it. That, of course, is spilled over into the equity markets. When we look at the S&P, though, the S&P has a real shot at moving higher next week if the dollar sells off. The only problem is we have a lot of fundamentals like Brexit and some of these things that are really having a negative effect on stocks in general. Some of the things, some of the nonsense we've seen from Apple, suggesting that they're only going to give yearly results now instead of quarterly results. Just another reason not to buy these products. If a company is not going to be transparent and give me their quarterly earnings, give me their quarterly sales, then why am I buying that stock? So that's had a direct negative effect on a lot of the spin-off companies that deal with Apple also. But the main thing that's had a very negative effect is on the S&P. Of course, Facebook is partly to blame for that too, but overall, right now, we're kind of in no man's land with the S&P. We're between our zone 1 on the bottom and the zone 1 on the top. So we'd like to see it push to one direction or the other. Right now, there is a slight bias that we are going to move higher. Now, when we look at our key pivot area, you can see that we're trying desperately to close above this. Our long predicted pivot area 27.40, we've closed just barely above that area. So again, there's a very slight bias for further upside back towards this top of this zone 1 area. That area is going to come in right now at or about the 28.17 mark, but in most cases equities do rally into December, into the end of the fourth quarter, so we'll see if we get that this year. But there's as many negatives as there is positives for the equities out there right now. Now, as we go into our main Forex pairs, The euro will absolutely follow gold. If gold can continue to advance, the euro is likely to follow that. We've closed above our key pivot area, our T cross long at 113.73. We had no problem closing up above that. We can see that our predicted differences, our neural index, predicted MACD, all of the indicators are basically advancing forward here. So when we look at our long predicted right now, our downside pivot area is going to be about 113.43. I would anticipate a test of this area on Monday. If that area holds, then we know we want to continue with longs, or in short of basically selling US dollars. Same thing here, guys, would apply for US Swiss franc. I've been doing this one with my own direct clients for weeks and in the VantagePoint Live training room. Very significant resistance up here in zone 2 and zone 3. We're just simply unable to break above 101.50, or more importantly, the 102.30 area. We're not even getting up into that area. All of our indicators are turning negative here, so likely the Swiss franc would likely have a pretty decent week next week. When we look at our long predicted, again using our blue line only, this is our first day that we've managed to close below this area. So 1.0010 is the area to watch on Monday and Tuesday. But remember, Monday's trading price is not always the most accurate. Tuesday, Wednesday, Thursday, but we do have a holiday short week, I believe, next week with the US Thanksgiving. Now, again, all of these indicators are lining up short, so the preferred strategy here next week is to sell rallies on this particular pair. Now, as we come into the pound dollar, I'll say the same thing here as I've said to my own direct clients, is this is a pair we want to be basically staying away from now. This Brexit needs to be resolved, put behind us, and so we can move forward. You can see by these huge bars, this thing is all over the map here, guys. But there is still a primarily negative bias based around the intermarket correlations. Now, if the dollar comes under pressure across the board, that should help the British pound. But again, Brexit is a constant thorn in the side for this for sterling. So again, keep that in mind. Our key pivot area up here, 29.43. We're closing well below that at 128.27. But again, one of the critical areas that I like to watch here is we take our blue line here. This is the area to watch, 128.94. If we can retake that area, then we could be getting ready to move higher. Now, with dollar yen this past week and going into next week is very much risk on, risk off driven. Risk off scenario, dollar yen goes lower, but it follows the equity market. So if equities can recover, we could see the dollar yen recover also. We're sitting just at the top of zone 2. Zone 3, the top of zone 3 is all the way down here, a very significant level down around 111.50, 111.40. But right now, we've got to keep a close eye. We're very close to the T-cross pivot area of 113.34. Now again, when we look at our long pivot area here, we've got our 2-day rule where we've closed, you can see right here, 2 days below this blue line, and then on the third day the pair just gets slammed lower. But of course, after retesting that blue line at 113.52. Still a very big area. Most of the indicators here from VantagePoint are predicted MACD, our RSI, neural index, and predicted differences all still pointing lower. But again, if the equities recover, dollar yen could stabilize and start to move back up. So keep a very close eye on the S&P 500 next week if trading this pair. Now, with U.S. Canada, even falling oil prices, are not sending this pair higher through zone 1 or zone 2. The new verified resistance and support zones here, the upside is held, so the natural next move would be down to the lower zone here into zone 1. That would come in down at or about the 130.50 area. But we must continue to push below the T-cross long, the pivot. 131.44. Now, our predicted difference cross is all pointing down, neural index, crossover in the predicted MACD, and the predicted RSI all pointing lower. Most indicators here suggest that US Canada is going lower, and you can see that 2 days ago we crossed below the blue line. That led to an even bigger move on Friday down. So Monday likely a bit of consolidation as we get ready to gear up for the next leg down on this particular pair. Now, with the other two main commodity currencies, Aussie and New Zealand are the two strongest currencies in the the Forex or the futures market in the month of November. Huge gains on the Aussie and the New Zealand, despite most of the major pundits suggesting to short both of them. I was definitely not in that camp. I'm staying with the intermarket analysis side of this, and we can see clearly here that we've had a big push up. But again, this pair, Aussie and particularly the New Zealand, have made substantial gains in the month of November. So a corrective move can't be ruled out as we start to move towards zone 3. But for now, the indicators are mildly overbought, but this move lower on Aussie right here this past week appears to be corrective in nature only, as we came down, tested the T-cross long, and then bounced higher. Now, when we look at our long predicted by itself, you can see the market is just hugging this blue line. But again, we've got to be a little bit cautious as we start to approach this 74.30 area. Anywhere above, essentially anything above 74 is a little bit high risk on the long side at this particular time. And I would say the same thing applies to New Zealand. When we look at the New Zealand, we're aggressively moving higher. But again, both the Aussie and the New Zealand, the strongest currencies in the Forex and the futures market this month. So whenever we make gains this big, particularly if one of these two pairs is going to correct lower, it would likely be New Zealand. We're heavily overbought. The RSI 90.4, but again, doesn't mean it can't keep going higher if the dollar comes under significant selling pressure. So once again, we've got a holiday short week with the U.S. Thanksgiving. It's usually one of the most volatile trading weeks of the year. So keep that in mind in your trading next week. So with that said, this is the Forex Weekly Outlook for the week of November the 19th, 2018.